Hello traders, Gary Wagner here, just about 12 noon in Honolulu, 5 o'clock in New York. It is Monday, 9th day of December, 2019, and this is the Daily Report for Gold and Silver. After this Friday's strong sell-off in gold and silver, we saw a small recovery today, with gold and silver closing slightly higher on the day and the dollar trading slightly lower. Of course, traders are really in a wait and see for the conclusion of this month's FOMC meeting, which begins tomorrow and concludes on Wednesday. The current thought by the majority of analysts, including myself, is that the Federal Reserve will maintain a steady monetary policy. There are some out there that are actually looking for the possibility for them to make another rate cut. However, I believe that that is highly unlikely. Nonetheless, either interest rates staying the same or a rate cut would be bullish to neutral for gold. And the key is going to be what President Donald Trump does this Sunday, December 15th, in regards to the trade war and whether or not he will roll out some new tariffs. That being said, let's take a look at our current pricing. We had a mixed bag today in the precious metals, with gold and silver and palladium moving higher and platinum closing lower on the day. That was aided by a slightly weaker U.S. dollar, but as it stands, gold is currently trading at $1465.90, a net change today of about 80 cents. Cash is also trading higher on the day. Silver had a realistically nice move, up 6.5 cents at $16.66. However, since it broke below $17 per ounce, many analysts, including myself, have gotten conservatively bearish on the precious white metal. Let's take a look at our current trade and the trade alert that we sent out today in our technical studies. We are looking at a daily chart of February gold. Of course, we are long currently. Our stop this morning was sitting at approximately $1,459.13, and I did send out a recommendation to lower that stop, and I wanted to spend a couple of minutes explaining my rationale behind it. Right now, we have in essence placed our stops just under last week's lows that came in roughly at 1460. That's these two candles right here. And my sense is that that should certainly hold on a closing basis. However, on an intraday basis, when the Fed initiates their conclusion to this month's FOMC meeting, that they'll announce that it is a neutral stance, but we could see some increased volatility, quickly taking gold a little bit below this price point and then subsequently recovering. And that was the rationale behind moving it just under this low right here. And I believe that there's no doubt that that will certainly hold. And I still believe we will see higher pricing. Of course, everything really hinges on upcoming headlines. The FOMC meeting, if by chance they in fact raise rates, which they've gone on record as stating they would not, but that would be bearish for gold. And if Trump actually does not roll out the tariffs on the 15th, this upcoming Sunday, that could also have a negative impact on gold. But all things being equal, I believe that we should see solid performance. We should see a hold and wait as the Fed meeting concludes, and then I am looking for higher pricing. Therefore, I recommend that you maintain your current long position and that you implement this new stop placement at 49.13. And lastly, I did want to take a quick look at silver. Silver did close up, as I said, about 6.5 cents. However, what is bearish to me on a technical basis is the fact that it broke through this long-standing retracement at 1681.9, and that was based on a 0.618% retracement. Because once it broke below that price point and actually below these lows that came in here, what we're seeing is that although it closed slightly above that point today, we don't get any real solid solid technical support until about 1650. So I do believe that we could see gold at least outperform silver, and silver could be bearish with gold bullish. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.